I'm Dan Fitzpatrick at StockMarketMentor.com on Tuesday, September 24th. Let's look at Aetna real quick here. The market's been a little volatile, and it's probably going to be more so going forward while we get through all the Washington, D.C. Stuff. And so what we really want to be doing is, number one, respect the volatility, or as I've been saying lately, we expect the expected, because that's why it's expected. We expect the expected, but we have to respect the unexpected. But anytime you can get a situation where you've got a well-defined entry, a well-defined risk, that's a stock that's worth looking at. And there's several that I'm covering in the strategy session today. But this is a good one here because you can see Aetna. First of all, we'll look at the XLV. Come on, come to Papa, telechart. You can do it. There we go. It's pulling back. It looks like it's close to a good buy point here. Really good buy point at the 50-day moving average. So we've got some sector stuff going on. We'll even go zoom out a level and look at the overall market. Okay. Not the perfect buy point by any means. If this is going to continue, we should even get a drift below the 50-day moving average. But we do have, 4 days of a pullback. So we'll say at least we're not buying at the high. So the S&P is drifting lower, which makes it kind of an okay deal. XLV, same thing, drifting lower, 4 days, it's okay, right? So now what are we doing? We're looking for some predictability, and then so we look at Aetna and say, okay, this has been drifting lower for what? 1, 2, 3, 4, 5 days. 5 days, pretty big pullback. Now we've got a well-defined support level here. So this is how you make a trade, and you can apply this to just about any chart, at least on any chart that you should be trading. When you see the whites of the bullseyes right there, then you go ahead and buy the stock now. Take some stock and then just look to sell it, say when it gets up to 68 or so. It's not a big trade, but it's a trade. If you look at the daily chart, or excuse me, the intraday chart, you can see it trailed off towards the end of the day. So does that mean we're going to rush out and buy it first thing in the morning? No. We look at this. We see what's happening. It's trickling along the lower Bollinger Band. So we see what's happening on the daily chart. Okay? It's pulling back. We see the open candle. That's a good thing. Now we look at the 5-minute candle, and we realize the open candle is because it opened up down here, traded clear up here and closed here, right? You get this. So what we're looking for now is we're zooming in. We've made our decision on the that we want to buy the stock. Now we're down here on the 5-minute chart, and what we want to see is the stock stop trading between the lower Bollinger Band and the middle Bollinger Band, which is just the 20-period moving average. Because when it was doing that, by definition, it's drifting down. When it's doing that, in other words, in above the 20-day or 20-period moving average and below the upper Bollinger Band, it's moving up. So when we see the stock start to round out and then start to do that, bam, that's when we pull the trigger. And I would rather buy here than I would buy here, because I don't know how far down this is going to go. So, okay, that's it for this video. And members, get over to the strategy session. I'm talking a lot about risk management and about when to be aggressive, when to add, when to be in a full position. This is stuff that I want you to know, okay?